Hey y'all, how y'all doing? If you don't have your headphones in yet, that's how you'll be able to hear me. Looking for a few more thumbs up, everything good? Awesome, thank you so much. Thank you all for joining me. I am really excited to talk to you today about, well, compliance, my favorite topic, hopefully you agree, but really about why compliance is so intertwined with what's important when you're winning and retaining customers. Like the elements that are important for strong compliance are very much one and the same with those that you need to build trust and win new business and grow. So today we'll dive into two key areas, both why we should maintain stability in a time of regulatory uncertainty with strong compliance practices regardless of that fluctuation in the larger space. And then also what are the strategies that we can take, whether it's for compliance or for maintaining and winning our business, that build trust and really give us a competitive advantage in this market. So, quick intro. I'm Christy Catterett. I lead global network and program compliance at CJ. I am also part of our financial services specialized vertical, where we have a team of experts who really know this space and have been working in it for some time. I built my expertise working with credit card, loan, deposit, and investment advertisers over time, largely in our client development organization. And I don't really care to say quite how far back because it makes me feel real old, but some of you might remember when the brand GetSmart was a sister brand of LendingTree. They were in one of my first portfolios. I had TradeKing before they were Ally Invest. I've also worked with plenty of advertisers who still have the same name, Capital One, Barclays, to name a couple. So I was inspired to join the compliance team from working with those advertisers, and I've been doing this since 2018. Now, I have a bit of news that I think we all know but don't love. The financial services industry doesn't have a lot of trust in the United States. This was a study by Deloitte and reported on by the Forbes Finance Council from 2024 that said that finance is one of the least trusted industries, but that same study highlights that any industry, the most trusted companies in it, outperform their competitors by up to 400%. So regardless of the level of trust of the whole industry, those who shine above, who really build that trust with their partners, with their customers, can still outperform and have a great opportunity. A brief history lesson, bear with me, this is super relevant. Regulatory uncertainty isn't new. Maybe new to some of us, obviously a lot of turmoil this year, but history has plenty of it, and also tells us that the pace of new regulation is accelerating, so that whatever happens next, we have to be ready for it. So just a couple of quick highlights from back in 1907. Christopher, you were around then, you remember, right? The panic of 1907. It took about 6 years after that, after what is still one of the most significant drops in the stock market in our history, bank runs, bankruptcies. It took 6 years for us to get the Federal Reserve as a reaction to that. Then we had the Wall Street crash of 1929. That took about 4 years before we had the Banking Act of 1933 and the SEC was created in 1934. Fast forward to the 2000s, we of course had the subprime mortgage crisis and the general financial crisis of 2008. Those were really quickly followed by the Housing and Recovery Act and then Dodd-Frank, which brought us the CFPB. That only took about a year and a half from those big events to big impactful regulation. So the pace of regulation that comes from a significant event in the financial services space has accelerated from 6 years, 4 years, 1.5 years. This suggests that if, hopefully not when, there's some sort of a big event, possibly as a result of deregulation or just regulation failing to keep up with new things, there could be a new impactful regulation that we all have to adjust to in under a year. So it's better for us now to stay on top of what is happening, keep those processes in place that when the CFPB more or less existed, it was when we put those processes in place because there were regulators watching, keep them in place, even if you don't feel like the regulators are watching as much, because they'll be back. And it'll be a lot harder to rebuild than to just maintain. But above that, you still have to worry about states. This study that was compiled by Performline showed that the vast majority of regulatory actions were already being completed by states, as well as the fines that were imposed related to them. Federal is only a tiny piece of the pie already. So even if federal regulation is light, we still all have to contend with a variety of different states. It's even harder. Some of them might be a little bit different depending on where you're marketing, who you're marketing to, but we have to stay on top of our game because there are still other regulators out there who are watching. And there's also, consumers. This is just a highlight from the Tech Friend newsletter from earlier this year. And it highlighted how the app 5 calls in particular was helping consumers who really weren't typically activists very quickly reach out to their local politicians and representatives and demand greater financial services regulation. And I think that really speaks volumes for how much they trust us and how much that regulation can impact the trust that we have. We also, of course, want to talk about Gen Z. I might have framed this differently if I'd seen the keynote speaker before the session, but there are still relevant demographic data points for us to be aware of. And Gen Z is even less trustful than the average, according to this eMarketer study. And they don't just kind of say, oh, I've heard so many examples of this today, I don't want to repeat it, but truly, a Gen Z person is not going to just say, hey, this is what my parents did, so this is what I'm going to do. They don't have that inherent trust or just want to follow what was happening before. They're going to do a lot of research. And if we're not only meeting them where they are, but also that the reviews are good, that we have not had a misstep in our brand, then that's how we're going to gain their trust. But if there is a misstep, that's going to haunt us. So a few years of lighter regulation could still really come back to bite us if something comes out that someone researches later and says this bank was not trustworthy. Gen Z, of course, is also getting a lot of their data and their financial services knowledge from social media. This was a study by Insurify that highlighted that it's among the top 2 sources of where people are learning about financial services. So again, I feel like we've already said this so much today, but that's good, we're all on the same page. It's so important to meet them where they are and to also take the opportunity to help to provide that education, to be a trusted source of financial education in the influencer space. And also, I don't want to undersell our traditional affiliates. Just a quick search on ChatGPT with a prompt asking, what are the most trusted sources when it comes to, in this case, credit card reviews? I didn't manufacture this. I did it one time. This is what came up. NerdWell, The Points Guy, Bankrate, Forbes. They're all a lot of hitters. All of you know them, and they're still super relevant, both to where AI is getting its information, but also where customers are going to find that information in many ways. So all this adds up to the importance of being accurate, transparent, and really delivering customer value. All of those things are exactly what we do in compliance. So whether we're framing it as a way to just win with customers and to win with our partners, or to be compliant, it's the same thing. And just kind of want to highlight this connection, because I've talked a lot about this in the framework of consumers, but really it's just as much about advertisers being trusted by publishers and publishers being trusted by advertisers. That is both of the ways that consumers are reached, and without one, the rest of it does not follow. So for the last few minutes, I'm just going to go through some key strategies, both advice for advertisers and for publishers, about simple things to keep in mind to maximize your competitive advantage in trust and in compliance. The first is having clear criteria and consistency. I know it's super obvious, we talk about it all the time. Advertisers having strong brand guidelines, very clear program terms and conditions to tell your partners what it is you expect of them. And then also publishers having clear disclosures, both for consumers who are visiting your site and also for the advertisers who are coming and checking and making sure that you do provide the appropriate disclosures. And then also any methodology you have, calculations, comparisons, how did you decide what was the top pick in a category? Making that clear is going to build trust with consumers and is also really important to your advertisers. Now the next is communication and responsiveness. So for advertisers, that means giving quick feedback when your publishers submit a mock-up, a new idea for review, and also setting expectations ahead of time. So I know for some of you that is not easy. There can be a lot of hoops to go through before something can be approved, but at least let your partners know. If it's going to take 2 weeks and they need to know in a week for this placement to go live, let them know ahead of time. And then they can put the resources where it makes the most impact, and you can work with them on something else that might be easier to launch. For publishers, it's kind of the same thing. It's being really responsive, whether it's a compliance issue or simply a notice about a product update or something else that has to happen. And it also means providing that information about what you need. If you do have a deadline, provide that up front. Make sure that communication is going both ways. And I feel like as I'm standing here, of course, it's super obvious. Chrissy, why are you telling this? I've seen so many cases where that doesn't happen. It's accidental, everyone's busy, has a million things going on. Be intentional about it, and it can make a big difference in your relationships. It also makes things easier on your CJ team too. All right, next up, advance notice and reasonable deadlines. This all very much ties together, but in this case, I'm talking about for an advertiser, when you do have a product update, a limited time offer is going up or coming down, or something like just a process change, or even just what your processes are from the beginning. This makes a huge difference for your publishers to be able to respond to it and be set up for success, to not be likely to miss the update deadline, or to not realize that there was something that was incorrect and it just wasn't a clear communication and they didn't have time, so they didn't have an opportunity to QA or ask questions themselves. Publishers, this is also kind of going back to that. If you need something, a mock-up approved in a certain amount of time, if you're redesigning your site and advertisers need to know about that and approve it before you can go live with their content in the new structure, give them time, right? Give them as much advance notice as you can. They're not going to be able to turn it over overnight. Okay. I also want to highlight, we talked about this just recently in the finance roundtable, that automation to bring your product details to your publisher sites and not have human touch points is super important, both for the speed of the ability to update, to make changes, to do so very quickly, being responsive to something that you might not have had a heads up on yourself. It also significantly reduces the chance for violations to occur. Accidents, someone forgot to include a character when they copied and pasted. Like, those things can happen, and with the feed, it's taken away. I know Stephanie's probably thinking, yes, I just mentioned this. So for advertisers, that actually means integrating the feed. It can be a little bit of a technical lift, but then you're all set. And it's a lot easier for everyone on your team to get that data through. And then also, we just talked about this, you might have to tell your publishers they have to use it. And there can be a ramp up working with them to get it prioritized technically, but it pays dividends in the end. So it's really worth everybody pushing for automation where it can save everyone so much time and headache. And it also probably opens new opportunities. More feed-based partners means you can have more partners with less risk involved. Okay, wrapping up, in summary, and kind of putting the cherry on top of all of it, all of these things still require monitoring. So again, back to compliance, back to the importance of it. But again, even if it's not a regulatory concern, you want to make sure that the things that are out there are right. You don't want consumers hitting a publisher site, seeing an interest rate, seeing a points bonus, getting to the actual application and that not being what they get. So having strong content monitoring, there's a lot of great AI solutions coming out now, or a lot of great effectiveness in the one solution that I've been testing that we're going to be implementing at CJ and using it to monitor at scale. So you don't need to invest in 1 million people, but you do want to have smart people managing that tech and making sure those protections are in place. You also want to have experts to do fast and effective violation resolution. So if there is a problem, people are seeing it through. It is also using automation as much as possible, but making sure that there's follow through, there's escalation if needed, that a link is blocked if it's potentially going to cause imminent harm to a consumer who clicks on it with the wrong information. And then back to that last piece, feeds, communication, everything we just talked about, they help create prevention so that you're minimizing your risk. And that's really what this is all about. In addition to winning with customers, you don't want to have a situation where something big happens, you have to explain it, you want everything to be running smoothly, and frankly, that's what we're here to do as well. So I hope I'm on time. I have no idea if there's time for questions, so someone let me know. 3 minutes? All right, I have 3 minutes for questions. There's also a survey here if you all are interested. Yeah, please. It's a great question. A lot of advertisers will have, their terms and conditions, their program terms, they're dense, they're required by the legal team. They should certainly reference and message the key points there, but most will then also have supplemental brand guidelines to, provide upon onboarding, maybe share out again, potentially have a publicly accessible link if that's not acceptable, to send like a PDF or something like that to publishers directly. And I'm glad you asked that too, because one of the things I've seen is that sometimes advertisers have different versions than what they give to their publishers. You've got to make sure they're the same, right? Like if a publisher actually follows the rules or your CJ team reviews it ahead of time, and then it goes to the advertiser's legal team for final approval, and they're like, no, this isn't right, this isn't right. It's like, what are we doing wrong? And they're like, well, it doesn't meet these guidelines. But they weren't the guidelines that were shared with us. So as an extra emphasis on that, not only having that brand guidelines document, but making sure we're all using the same one.
Chrissy, I want to double click on something you said. You said that consumers by and large aren't super trusting of financial institutions. But when customers are trusting of a particular brand, they experience a 400% lift over competitors.
Up to. Let's be compliant. Let's not leave out up to, but yes.
Important phraseology. What can financial institutions do to amplify trust?
Christopher, were you not listening to my presentation?
I was dialed in. I just want to distill it down.
I mean, ultimately, it's having trusted partnerships who can be that trusted voice for you. So there's a lot in the market that is going to go well beyond your affiliate program, but at least, in the confines of what we're all here to talk about today, if you're working with publishers who have editorial independence, who have a trusted brand themselves, and they're saying, these are the benefits of this product, this is why I would recommend it, or who I would recommend it for, here's what you can expect. You're going to build trust that way because it's not just you saying it. It is that trusted third party, it is that influencer, it is that comparison site. It isn't just coming from an ad from you directly.
Perfect. Right on time.
Stephanie, I'm sorry, did you have one? Okay. Thank you all so much. I really appreciate you joining me.